You've insured your home against fire and your personal property against theft. You've insured your car so that it can be replaced in case of an accident. But there is one thing that cannot be replaced, and that is you. No one likes to think about it, but what would happen if you or your spouse were to die unexpectedly? Without one or both of your incomes, how would you pay the mortgage? Unfortunately, this isn't as unlikely as people think. The simple fact is 1 in 5 men and 1 in 7 women won't live to retirement age. Even though no one wants to think it, there's always a chance you could be one of those unlucky people. So would the loss of your income or your spouse's force you to sell your home and move away from friends and neighbors? For most families, the answer is yes. Every year, many homes are foreclosed because of the death of one of the homeowners. So what's the best way to protect your family from ever losing their home? The answer is mortgage protection insurance. Mortgage protection insurance can provide your family a tax-free lump sum of money if you were to die unexpectedly. This money can be used to pay off your mortgage or cover other expenses that come up. But remember, mortgage protection insurance only provides this security if you have it in place when you need it. Call us today to ensure that your loved ones stay in their home no matter what happens.